Welcome to another S&P 500 analysis. Today is June 10, 2022. After a higher than expected inflation number from Friday's CPI report, the S&P 500 is back near the bear market territory. So will the S&P 500 enter into a bear market, or this is just a final shakeout? We'll analyze the sentiment, the market internals, and the price action of the indexes to see what the market is telling us. So stay tuned. Now, before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And if you are looking for an unbiased view on the market, then click on the subscribe to subscribe to this channel, and be sure to click on the notification icon to turn on notification so you won't miss any of my future videos. Now, let's start with this weekly chart of the S&P 500. As you can see, the range have expanded once again after the previous week with a very small range. The range expanded to 268.62 points, and for the week it lost over 200 points. It lost 207 points, or 5.05%. And also notice that there is a little bit of a evening star type of candle pattern here, and this usually indicate a bearish type of price action pattern. So we'll see, will this price action pattern will play out on the downside and come down and test this low here. So right now the price is closed underneath this declining 10-week moving average and also the declining 40-week moving average. And in addition to that, we are continuing to see that the continue to be making a lower low, lower high. So if we break this low here, then we'll basically continue to form that lower low, lower high pattern, and that is a characteristic of a downtrend. So right now, as the price pattern indicate, and also the technical, the weekly trend is down. Now let's take a look at the sentiment. Here we see that the VIX is coming back up to the upper portion of this 20-30 zone, and on Friday it closed at 27.75, and also the put call ratio came all the way from below 0.75 to 1.17 on Friday. So really made a dramatic move above that 1. So definitely there are a lot of put buying on Friday and also on Thursday. Right now, we're seeing the market participants are getting quite fearful and also getting a little bit more bearish because they also playing it on the downside by buying puts now, although there are a lot of hedge going on as well. But once we get over 1, then you get the market participant all getting a bit bearish. And looking at the market internal for the NYSE, as you can see on Thursday, the up-down volume ratio expanded to almost 13-1 on the downside. And on Friday, we actually got a much worse down day on Friday, but the up-down volume ratio is only 7.5-1 in favor of the downside. So we are seeing a little bit of an expansion on the up-down volume ratio on the negative end, and also the daily advanced decline also expanded on the downside with over 2,200 more declining issue on Thursday, and same thing on Friday. It was 2,256 more declining issue than advancing issue. So definitely the tone in the market is negative, and with broader market participation of moving more negative. Now also the other thing is was mentioning that we had some quite a few days that the New York Stock Exchange new 52-week high outnumbered the new 52-week low, and that's where we get this positive number. Then on Thursday, we saw it start turning negative. That means the new 52-week low, the number of stock making new 52-week low, is more than the number of stock making new 52-week high. And you can see on Friday, also got a little bit more. On Thursday, it was the margin was only 101 more new 52-week low than 52-week high. Then on Friday, got 250 more new 52-week low than 52-week high. So that is something to keep an eye on, although it is still way above these numbers here, prior to the May 20th low. We see that back in May 9, on May 9, we actually have 1,057 more stock making 52-week low than 52-week high. And also on May 12, it was 1,052. Okay, so right now, although it is expanding a little bit, but it's still way above this negative extreme here. Now, looking at the cumulative advanced decline line for the New York Stock Exchange, it did come down, but it held the low here. But also notice that the S&P 500 is closed at 3,900.86, so 3,900.86. And on May 20th, it closed at 3,901.36. So we are getting a little bit of a divergence here, positive divergence. So look for the possibility of a bounce. Remember, we also saw a positive divergence here that also need to get resolved. So just keep an eye on the possibility of maybe getting a bounce off of this this low here. And looking at the NASDAQ, the up-down volume ratio on the NASDAQ is not as bad as the New York Stock Exchange. It's only 3.6 to 1 in favor of the downside on Friday. Now, the advanced decline is pretty bad. So it is a broad market decline on Thursday as well as on Friday, just like the New York Stock Exchange. There were 2,404 more declining issue than advancing issue on Thursday. And on Friday, there were 2,786 more declining stock than advancing stock. And also, similarly to the New York Stock Exchange, the NASDAQ also saw expansion on the number of stock making a new 52-week low. We saw it came up to 461 on Friday. So right now, the margin is 439 more stock making new 52-week low than 52-week high. Again, it is still way above these low here, these extreme back on May 12, when it was 1,690 more stock making 52-week low than 52-week high. So it is still quite above this low here. So that's a positive in the sense that although it did expand a little bit, but it's still way above this extreme. Now, the NASDAQ 100 did not close at a lower low here on May 24th. The closing low was 11,769.84, and Friday's close was 11,832.82. So it's closed with a slightly higher than the May 24 closing low. So we are not seeing any divergence on the NASDAQ and the NASDAQ cumulative AD line. Now let's take a look at the price action of the indexes, first starting off with the S&P 500. As you can see on the S&P 500, it came back into this 19.05, so it's getting close to that bear market territory. Remember last time it dipped below that and into the bear market territory, but did not close inside of that market bear market territory. In other words, did not close down more than 20%. But right now it closed at 19.05, so maybe next week if it take out this low here, then it's definitely going to be putting in the S&P 500 in a bear market. Now here we see that we're basically looking for a possibility, maybe putting in a low here and get a bounce back up. So we'll see, because again, this evening star type of pattern here could be really bearish, and I wouldn't be surprised to see that low get taken out, and then maybe we get a bounce up. Who knows, right? But right now we're basically looking at the price action and see what that will tell us. Because remember, later on, I'm going to show you on the ES, the E-mini S&P 500 future, there is a poor low here that need to get resolved. So because what I was looking at is the possibility that this thing could come up, and then the next time when it come down, then it take out this low here. But right now it might be this here will take out the poor low. Now, next week is FOMC meeting, and we're going to have an announcement and a press conference from Jay Powell. And in the last couple FOMC meeting, we did see a little bit of a rally up. So maybe that will kind of save the index temporarily from hitting this low here. So we'll see. Anything is possible. And for the NASDAQ 100, it is still in a bear market. Right now, it's down 29, almost 29.5% from the all-time high. So once again, here's the low here put in May. Keep an eye on this low here to see what to take this out. I also put in a similar, like the SP500, more of an evening star type of pattern here on a weekly chart here. We'll see what to take out this low here at 11,492 next week. And if it does, we are basically looking at the possibility of maybe coming down to the 618 at the 10,586, because we are looking at this big swing Fibonacci retracement, and it is sitting here near the 50% level, the 50% retracement. And here's the Russell 2000, and Russell 2000 got a outside bar here, and we're basically looking to see what it come down to this 50% retracement somewhere around 1,712 area here. It is in a bear market, here with this minus 26.78% from the high. And the Dow Jones Transportation also had a pretty bad read as well. It is putting out a outside bar as well, and it is dipped below this 32.8 at the 13,752. So we'll see what it take out this low here at 13,163. And if it does, then we're basically looking for the possibility of it coming down to this 50% retracement at 12,363. And the Dow Jones Industrial is still above this 382 retracement here, but it is also getting close to this pivot low here at 30,635. So we'll see, is it going to come down and test this low. It also put in a sort of like an evening star type of a pattern. So we'll see how this thing will shake out in the coming week. And here's the New York Stock Exchange Composite Index here. I put out a outside week here, and also it is in the correction territory, down a little bit over or nearly 13.5% from the high. So we'll see what it comes down to this 14,695 to essentially take out this low here. And looking at the 10-year yield, as you can see, it came up and took out this high and closed the week at 3.156. And again, I wouldn't be surprised to see that we're going to move up toward the 3.5. So just keep in mind that the interest rate is continuing to go up, and the FOMC meeting is scheduled for next week. So we're going to get another announcement from the Fed. And I tell you, I would not be surprised to see a 75 basis point announcement. And here, looking at the dollar on the weekly chart here, the dollar closed at 104.15. Like I said, I'm still looking for this to continue to move up to this 107 here. So basically, just still looking at that. And crude oil, yep, looking at this 126 get taken out, and looking at this 130 up here, this 130.50. And silver is holding this support here at this 20.42. So we'll see what it be able to get above this 23 here. Silver looks like it might want to run up to this 25. So if we take a look at this trend line here, so maybe it will encounter some resistance up here near the 25. And gold is still holding on to this trend line here, and it is bouncing here near this 1850. So watch this, looking at this thing to maybe move to these retracement level here and try to run itself back up to this 2089 area. Now here's some of the possible swing trade I'm looking at for those ETF, the index ETF. The first one is for the SP500, the SPY. And here what I got is essentially the expected range for next week. These zone that I'm calculating using some of the option prices. And also the addition to that is looking at these volume profile, looking at these high volume node, and also the version point of control for potential support and resistance or target. So right now we're basically looking at the price here. One of the scenario is for the price to continue to pull back next week prior to the FOMC announcement on the interest rate. So maybe we could get this pullback early in the week and targeting this point of control here, this version point of control, and that's essentially the May 20th point of control somewhere around 382. Now, if you don't want to play short, you could also wait for the pullback and look for a bounce on here out of this zone, then play a swing long to come up to this point of control here as the target, and that would be the somewhere around 397, and then trail it up to the upper expected range for the week, and that could be also in confluence with this high volume zone here, and also this point of control here on the 26th of May, which would be somewhere around 405. So those are a couple of the scenario. Then in addition to that, the final one, the second possibility for a swing long is for the price to come out of this value area, Friday's value area, basically look above and then come back and test this value area and then go. Then again, we're essentially looking at this 397 as the first target and trail it up to the 405. So that is the potential swing long and swing short for the SPY for the coming week. And for the QQQ, it's basically very simple. We're basically looking at this this high volume zone here, and here is the point of control down here somewhere around 281. So we're looking for a pullback to this 281. Then you could also play it back up on a bounce back up to the Friday's point of control somewhere around 290. And then you could trail it up to this upper range here near 300. Then the other one is essentially just, if the market decides to bounce, then basically just play it bounce up on a swing long, potential swing long up to the 300 level. And for the IWM, the ETF for the Russell 2000, essentially, if we are looking for a pullback, once you see a pullback down here to this area near the 174, essentially to this point of control here, and see would it hold and get a bounce off of this point of control. If it doesn't, then we're essentially looking for it to continue to pull back to this point of control here back in May 11, and that would be somewhere around this 169.5 or near the 170, basically near this expected move zone here for the week at the lower boundary. So if you want to play a short, a swing short, then basically that's what you want to do, is look for a break below that Friday's value area, and then target this 174, and then you could trail it down to this 170. Now, if you're looking for a long, then wait for this, see would it get a bounce back up here and target this 178.5 or so, this point of control, for the swing long. Or if it doesn't get a bounce off of this point of control, then look for a continuation to move down here into this zone, and then look for a bounce. And then again, basically you want to target this 178. Now, if the price decide to bounce without pulling back, or basically just say test and go, then you want to target this right here, somewhere around this 183 area here on this point of control, this 183.5, and trailed up to this 185.40. And that would be somewhere around this expected moves upper zone for the week. And on this market profile chart for the ES, the E-mini S&P 500, you can see we had a balance area here for quite a number of days. And then we finally broke down and end up with a lot of support structure. Basically, this right here look like a more of a margin call type of selling here, because we have a lot of the single print area, these area, and basically just kind of force selling there. They basically just need to get out, right? They it's just like the opposite of short covering. When you go up, the short basically just have to buy a market, and these right here just basically have to sell at the bid and just get out. And right now we're seeing a gap down. So and also it's although we got a nasty day on Friday, but it's actually balancing out pretty well. So we'll see. It did put in a poor low, so we might come down and test that poor low, and then we might see a little bit of a bounce back up, or we could continue to come down and resolve this poor low here, which is put in on May 20th, and that is the recent pivot low. So if we take out this poor low, then we are going to have a lower low put in, and looks like this poor low will eventually get taken out. But earlier I was basically looking at the the S&P to come back up, and then on the next huge leg down, basically on a big correction or getting into a bear market, then we take out this low on that on the way down. So we'll see. Maybe we could see the S&P 500 make a put in a new pivot low, a lower low next week. So we'll just have to watch. And here you can see the volume profile. We see this balancing area here, and then it finally broke down, and you can see that the poor structuring here. So right now it is sitting down at this area here, this high volume zone here. So maybe a chop around here before it come down and take out this low, or it could bounce back and come back up to this high volume node, get back above the 4,000, and possibly repair this poor structure and get back into this area, this zone here, and move up to 4,200. Never know, anything is possible, but right now we're basically watching the price action, and this is the area that we need to keep an eye on to see which way it's going to break. Is it going to break above, go back up to 4,000, break below, and come back down to 3,800. So in summary, the market seems like it's trying to make a shift, or it try to do a last of a shakeout, and before it maybe make another run back up to these highs here, or even possibly up at the all-time high. We'll see, right? Because the internal, although the internal is coming down a bit, but it's still much above the level that was, those low level that was made in the middle of May. So that could be the internal bottom. So even though if we see the index take out the May low, but if we do not see, a more new low versus new high, and more, advanced declining issue versus advancing issue, and also the up down volume ratio get down to like maybe 18-1, 20-1. Like a lot of people are still looking for this capitulation, but sometimes capitulation happen in a different manner. Not on the volume, one day type of capitulation, but it could be capitulating in a series of days, like we saw in the middle of May. Right, so just kind of pay attention to the price action in the coming week, because although the internal is kind of flagging us to be much more cautious right now, and also the market participant are getting much more fearful and getting bearish. So FOMC meeting, anything is possible depending what Powell will say, and depending what the Fed will do in the interest rate. Now, sometimes it might be kind of strange, because if they come out with a 0.75% increase, the market might look at that as a positive, because then the market will get a little bit of assurance that the Fed is really making a conviction of attacking the inflation problem rather than try to talk it down. Because they were talking about that inflation might have peaked, and that's a bunch of nonsense. They know there was the BS that they were trying to just kind of calm the market down. So right now, the market is really looking for them to make a commitment that they're going to do what they say they're going to do to control the inflation. The recession is going to come. Right now, the market is not focusing on a recession. They're focusing on the inflation. So until the Fed is actually doing something to try to control the inflation, then when that, whatever they do to see how much of an impact would it have on the U.S. economy in the recession, then the market will focus on the recession to see how deep the Fed have caused the recession, by their policy mistake. So that's when the market will focus on the recession. Right now, the market is focusing on the inflation front. Okay, recession is a given. The market expecting a recession, but they are not pricing in of how deep the recession is going to be yet, because right now they want to know how committed the Fed is going to attack this inflation problem. So be careful and be sure to smash that thumbs up to help promote this video. Thank you for watching and stay safe.